I'm gonna re-explain. I'm gonna re-explain this quickly, which is example one. I did explain it in the previous video. I'm just gonna explain it again. Now, in example one, they said the following information relates to Greystone Limited. The authorized share capital is 700,000 ordinary shares. So that 700,000 relates to authorized. So that's the maximum number of shares that a company may issue. And then they gave you an extract of balances and totals of adjustments have been made. So this is after adjustments have been made. On the 1st of March 2017, your share capital was 5,848,000, which is your share capital, but you were not told what was issued for you to get that amount of capital. I will start by recording the authorized share capital in my share capital node. So I have authorized and number of shares will be 700,000. Okay. And then I'll have issued afterwards. Now for issued, I don't know how many shares were issued at the beginning of the year. So I'll just go to additional information just to get more information. It says there on 1 March 2017, 70% of authorized share capital was in issue. So they're telling you that shares issued on the 1st of March, for us to raise that capital amount of 5,848,000, 70% of this authorized shares were issued. So you will simply take that 700,000, multiply by 70%, meaning that at the beginning of the year, we had 490,000 shares issued. And the share capital raised from issuing 490,000 rand, 490,000 shares was 5,848,000 rand. Okay, so that's what we have raised by issuing only 490,000 shares. All right, and we managed to make 5,848,000 rand. So that is a rand value. On your left-hand side, that 490 is just the number of shares that we have issued. We issued additional shares on the 1st of November 2017, and we issued 160,000 additional shares at 11 Rand 51 cents per share. So for me to record this, I will simply say 160,000 additional shares issued at 11 Rand 51 cents, and that will simply give me 1,841,600. And then it says on the 19th of February 2018, the company repurchased. To repurchase means you're buying back the shares, which will reduce your share capital. But remember, your share capital will decrease at original cost. And when we have issued so many shares, we do not know what the original cost of each share is. That's why we have to calculate the average of the shares just before the buyback. Please note that this is the share capital just before the buyback. Those are the number of shares just before the buyback. So we will simply take the share capital before the buyback divided by the number of shares before the buyback to get what we refer to as the average price per share. Now, in this case, I will put 50,000 in brackets because I'm buying back shares. It reduces the number of shares that have been issued, but these shares were repurchased at APPS. APPS means the average price per share. As I've explained, it's 5,848,000 plus 1,841,600 rands. You divide it by 490,000 shares plus 160,000 shares. These are simply the number of shares that have been issued, and that will give me 11 Rand,83. When you calculate your average price per share, make sure you round it off to 2 decimal places. That's why I will get that 11,83. That becomes my price for the buyback, which is the original cost of these shares that were bought back. So these 50,000 shares that were bought back, because we don't know which shares we are buying back and what the original price is, because we are buying from different shareholders. So that's why we're using the average. And in this case, we'll simply have 591,600 as our original share capital that we received by issuing those 50,000 shares. So it reduces our share capital. At the end of the year, I will simply take 490 plus 160 minus 50. It'll give me number of shares that I have issued by the end of the year. And these shares will have raised a capital amount of 5,848,000 Rand plus 1,841,600 minus 591,500. And that will simply give me 7,098,100, which is my share capital that I will have raised by the end of the financial year. I will try and find the average share price of these shares that were issued by the year end, that are in issue by the year end, by taking that 7,098,000 Rand, 98,000 Rand, 98,100 Rand. So basically, I will take this share capital amount and divide it by the number of shares, which is 600,000. Okay, take the 7,098,100 Rand divided by 600,000, and that will give us an average price per share of 11 Rand, 83. You'll realize this is exactly the same as your average price per share for the shares that we bought back. If the last transaction was the buyback, the average price at the end of the year will be the same as the average price of the buyback. Okay, I hope you understood that. Let me just explain this table here. This table here, I love it because it simply breaks down the account that is affected and where each amount will be taken to from the buyback. So we'll simply have the first account will be your share capital account. Your share capital account will be affected or will simply be reduced by the original price of the shares, which is considered to be a PPS, and that will be 11 Rand, 83. The value will simply be the number of shares that we bought back multiplied by the average price per share, and that will give us 591,500. Okay, and that will be recorded in your ordinary share capital note, as I have shown you. Another account that will be affected is bank. Why is bank affected? Bank is affected because we have actually paid some amount of money. Okay, so our bank account need to decrease. Now, how much did we honestly pay here? We paid 16 Rand per share to buy these shares back. So BBP stands for buyback price. So our buyback price is 16 Rand, as it is given over there. So when you take the buyback price and multiply by the number of shares that were bought back, you will get 800,000. This 800,000 is money leaving your bank account. It reduces the bank account. And that's why we're gonna record it in your cash and cash equivalent. We minus it from our bank account in cash and cash equivalent. And when we prepare the cash flow statement, this amount will be regarded as a cash outflow in the cash flow statement under financing activities. Okay. And then the last part will be your retained income. How will your retained income be affected? It's because from this buyback, the entity will have incurred a loss. How do we calculate the loss? You will simply take the original price of the buyback, original price of the share minus the buyback price of 16 Rand. Note that this 11 Rand 83 simply means that when we sold these shares, we received 11 Rand 83 from the shareholders. But now when we buy the shares back, we are paying them 16 Rand for the same number of shares. So meaning that the company has actually paid more than what it has received, resulting in the company having made a loss. And this loss will simply be 50,000 multiplied by 417, and this will give us a total loss of 208,500. And this loss will be recorded as a negative in your retained income note. It will be recorded as a negative in your retained income note. Okay. And these are just the notes where I'm simply explaining each of those accounts and how they will be affected. Now, let us look at classwork 3. In classwork 3, you are given ordinary share capital of 456,000, and the number of shares there will be 120,000. Okay, so basically, this happened on the 30th of September 2018. And when you read the transaction, it says on the 1st of December 2018, which is after September. It means that that September, guys, is the beginning of the financial year. Let me start by recording this. I will start with my authorized share capital. My authorized share capital here will simply be 300,000. And I will have issued, and the issued at the beginning of the year, I'll have 120,000 shares, and the share capital raised from that will be 456,000. Okay, And then this transaction, the first part of the transaction says that on 1 December 2018, Veritas Limited issued 10% of the authorized shares and received 174,000. So I will simply find 10% of that 300,000. It'll give me 30,000. So I issued 30,000 shares, but they didn't tell me at what price per share was were these 30,000 shares issued. And in this case, that we gave you the share capital raised from issuing these shares. So for you to get price per share, you have to take 174,000 divided by 30,000, and that will give you 5 rand 80 cents. And then this comes from the fact that they said here on the 20th of July, Veritas Limited realized that their profits before tax has doubled due to the drought in the Western Cape. With this in mind, they repurchased 20,000 shares at 3 rand 30. I need to specify that 3 rand 30 is simply the price above the average price. So they tell me that we purchased at 3 rand 30 above the average price. This is not the repurchase price. They're telling us that we bought at 330 above average price. So for us to calculate the issue price, we first had to calculate the average price. So these 20,000 shares, because they were bought back, we had to minus them, and they will be bought back at original price. And original price will be the average price per share, which is the share capital before the buyback divided by the number of shares issued before the buyback. And that will simply give us average price per share of 4 rand 20 cents. So that will be the buyback amount that we put in our ordinary share capital. We consider that to be the original cost price of the shares, which will give us 84,000. How did I get that 84,000? I took 20,000, multiply it by 4 rand 20 cents, and that will give me 84,000 rand. Okay, that's how I got the 84,000 rand. And then to get the 130, you will simply take 120 plus 30,000, and then you minus 20,000. It will give you 130,000. Your share capital will be 456,000 plus 147,000, and you minus 84,000. Okay. Now, when you take that 130,000, please note that that 130,000 is simply the balance of the number of shares that we have left. And the share capital that will go with that will be 456,000 plus 174,000 minus 84,000. It will give you a closing balance, and your closing balance will simply be 546,000 rand. So basically, that is the closing balance. If I take the closing balance, which is my share capital, and divide it by the number of shares in issue at the end of the year, let's check how much it will give us. It should give us an average price of 4.2. So the average price will be the same of the buyback, and of this one will also be the same. So we know that share capital will decrease by the average price per share, which is 4.20 cents. We bought back 20,000 shares. When you take 4.20 cents and multiply it by 20,000 shares, it'll simply give you that 84,000 rand. How much actually went out? This is where people are tempted to make a mistake. When it comes to bank, the money that went out, please note that that 330, they're telling you that is the price above the average price per share. And how much is the average price per share? The average price per share is 4 rand 20. It means that we sold for more than 4 rand 20 by 3 rand 30. So we actually bought back these shares at an amount higher than the average price. And the amount that we sold it for, it was 3 rand 30 cents higher than the average price, making us have lose an amount of money, which is 7 rand 50. So that's how much we have lost. We lost 7 rand 50 because that's what we have paid. Okay, that's what went out of our bank account. You will take that 750 and multiply it by 20,000, and that will simply give us bank, and bank will be 150,000. That will reduce our bank, and when we take it to the cash flow statement, it will be a cash outflow. Now, when you take your share capital and you look at what you have paid, it means that know that that 420 signifies what we received from the shareholders when we issued shares. But we paid the shareholders 7.50 for us to get the shares that we issued to them back. That means we as a company made a loss, and the loss that we have made will simply be 3.30 rand, which is the one that was given to you in this question. So we made a loss of 3.20 rand. In total, our loss will simply be 20,000 times 3.20 3.30 rand, sorry, which will give us 66,000. That 66,000, it's a loss that we need to deduct from our retained income load. All right. Please check out classwork 4 in the handout and attempt it. And this will be classwork 4.